Good evening, everyone. Welcome to the channel. Today I am going to talk about Huishang Bank interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Unfortunately, I don't see any extracted summary provided. Please provide the summary so I can generate a quick read overview essay on what businesses and services the company is providing. The significant increase in Huishang Bank stock price. A multifaceted analysis, Huishang Bank's stock price has experienced a notable surge of 78.18% within its 52-week trading range, from HK$20 to HK$3.92. While no single event can be pinpointed as the sole cause for this increase, several positive developments and analyst sentiments have likely contributed to the upward trend. Strong first-half earnings in 2025, with revenue up 3.3% and net income increasing by 5.5%, suggest effective asset management and driving profitability. Dividend announcements and a compelling dividend appeal from analysts also triggered a rally among income-focused investors. Furthermore, a bullish outlook on Chinese bank stocks from J.P. Morgan analysts and others anticipated potential upside due to stabilization in net interest margins and an increase in fee income. Additionally, growth in assets under management (AUM) of 12 private banks, including Huishang Bank, approached 20 trillion yuan, reflecting a quarter-on-quarter increase of 9%. This indicates growth in the broader private banking sector, which could positively influence perceptions of banks like Huishang. While fluctuations occurred, including a drop following Chairman Yan Chen's resignation, the stock later recovered as investors digested the news. These factors collectively suggest that the significant increase in Huishang Bank's stock price is attributed to a combination of strong financial performance, positive analyst sentiments, and growth in the broader private banking sector. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by industrial production expansion, equipment manufacturing, high-tech manufacturing, and exports of new trio products. Additionally, the increase in corporate loans, corporate deposits, discounted bills, supply chain finance, cash management, cross-border settlement, and mobile banking customer base growth have also contributed to revenue growth. On the other hand, potential drivers of revenue decline include low interest rates, narrow interest rate spreads, and a low-yield environment. These factors can negatively impact revenue by reducing the earning potential of financial institutions. Net income and profit margins overview. The company's net income experienced a moderate increase of 3.81% from RMB 8,986 million to RMB 9,328 million between 2024 and 2025. This growth can be attributed to several factors, including an increase in net gains on financial investments and a decrease in interest expense due to changes in interest rates. Profit margins also saw an improvement, with the net profit margin increasing from 42.19% to 43.85%. The operating income margin rose by 1.12%, while the return on average total assets, ROA, and return on average net assets, ROE, decreased slightly. However, these decreases were relatively minor, indicating overall stability in the company's financial performance. The decrease in interest expense was a significant contributor to the increase in profit margins, as it allowed the company to retain more earnings. Additionally, the reduction in income from guarantee and commitment fees had a minimal impact on the net income growth. Overall, these changes suggest that the company is becoming more efficient in managing its financial resources and generating profits. The company appears to be generating positive operating cash flow in several instances throughout its financial summary. Pages 21, 54, 97, 100, 137, 138, 182, and 197 all indicate a positive operating cash flow. However, there are also instances where the company's cash flow is not entirely positive, such as on page 20, where it is stated that the company is generating negative operating cash flow. Nevertheless, the overall trend suggests that the company is capable of producing positive operating cash flow, albeit with some fluctuations and potential liabilities to consider. The company's debt level and interest expenses have undergone significant fluctuations over the past year. While there have been instances of decrease in interest expenses, such as a 6.93% drop on page 13 and a significant decrease from RM 161,000, 976, 2024, to RMB 28,278, 2025. There are also periods where interest expenses increased, including an 18.6% rise in external interest expense on page 166. Similarly, the company's debt level has seen both increases and decreases. Total liabilities have risen by 269% from RMB 562,532,933 to RMB 12 billion, 71,619,393, page 191, while total debt decreased by RMB 135.8 billion from RMB 12,000 and 71.6 billion to RMB 1,935.8 billion, page 202. These mixed signals make it challenging to determine whether the company's debt level or interest expenses have changed significantly overall. The company's financial performance reveals a mixed picture across its segments. On the positive side, corporate banking and treasury operations have been standout performers, indicating strong demand for their services. Conversely, retail banking and other unspecified areas have struggled, highlighting areas that require improvement to boost overall growth. Management is promoting a multifaceted approach to drive growth and competitiveness. Key strategies include investing in digital transformation, expanding into new areas while consolidating core business foundations, and implementing strategic initiatives to promote growth. The bank also aims to achieve a carbon peak and carbon neutrality goal through its green finance business. To ensure stable business growth, management is building a comprehensive risk management system, focusing on preventing and mitigating risks in key sectors. The company aims to control market risk within a tolerable range based on its risk appetite and achieve maximum risk-adjusted revenue. Management is optimistic about the company's outlook, citing an increase in operating profit and earnings per share. To maintain financial stability, the company will adopt a capital management approach to protect against business risks and meet regulatory requirements. Overall, management's strategy prioritizes growth, competitiveness, sustainability, and risk management to ensure long-term success. The company has indeed paid dividends to its shareholders. In 2025, a cash dividend of RMB 12.1 per 10 shares was distributed, totaling approximately RMB 1,916.86 million. This payout is confirmed across multiple pages in the financial summary, solidifying the company's commitment to rewarding its investors through dividend payments. There appears to be no significant concerns regarding inventory buildup or supply chain disruptions. The available information suggests a decrease in manufacturing non-performing loan (NPL) ratios and mentions of supply chain financing as a corporate loan product, but without any raised concerns. This indicates that the current situation does not seem to pose a threat to inventory levels or supply chains. That concludes the financial summary for Huishang Bank. Feel free to comment below, and I will be happy to answer them when possible.